Okay, we're going to do our update on uranium here. It's Saturday night, June 19th. And so we'll start with CCJ, and we'll also go through some other commodities in this video. There's a lot of correlation here, so just understanding how things are converging. So CCJ, I posted on Twitter. We made a new low on Friday. That was day 25. Possible that that was actually our daily cycle low, right? That it's going to be a slightly higher low, higher than this low for now, right? You can imagine, even if this is our daily cycle low, you could see something like, a bounce from here that maybe goes all the way up to here before rolling over and continuing lower, right? And the weekly cycle of decline would continue, is the idea. And so if we go to the weekly chart, it looks like we had our weekly cycle low week 15. That was early, and we're now getting an early weekly cycle high on week 4. Last week was week 5, huge down week, big swing high below this low here. And so this coming week, if we are getting a DCL, a daily cycle low, we'll get a bit of a rally. Unlikely that we're going to make a high above this big bearish candle, but that gives you a very clear level. So the high of this candle is 24.32. And what I had been calling out is that this was a false breakdown on the monthly level, right? Because this candle here, so the monthly candle for June, made a new high above the May candle, but then started to fail. It hasn't gotten to the low of $20 yet, but there's still a good amount of time left in the month. And that also shifts the odds that wasn't our daily cycle low. Or if it was our daily cycle low, we could get a really early high, maybe on day like 4 or 5, and still make that new low this month. And even if we don't make that new low in June, we can still, you can imagine, we get a little bit of this, a wick builds up here, and then we just complete the picture in July. Happens all the time where you essentially run out of time on a candle. The bigger picture, though, and this is the thing to focus on really for all markets, because it's getting to a point that it's becoming a sort of blinking red light, that we have a potential 3-year cycle high on month 25. And so a 3-year cycle would be about 36 months. And so we may have our high on month 25, which was April. That's for CCJ. Same for pretty much all the uranium miners. So we've declined for 2 months since that top. And obviously the market is going lower. This is really a trend for really most asset classes. And so that would mean we wouldn't get our low until, March of 2023. And so that's something to start to really pay attention to. If this is a new weekly cycle, we're already getting a high on week 4. We could decline for another, let's call it 12 to 14 weeks. And then we get another bearish weekly cycle. You can start to paint a picture of how it might sort of unfold. So people looking at things like Denison really need to be careful, right? If this is indeed... So Denison, did Denison make that low? Let's see. So Denison just about actually did make the low, and then it bounced a little bit. So it did, hit that price target. But, you could see something like Denison, back down easily in the 50 cent range, like 50% downside from here. People are kind of playing around with this. I mean, this is starting to take on the look of a lower high from here, right? I mean, I know it's tempting to look at this as a little bull flag, but I don't know. This isn't looking promising. The other thing that I would call attention to is copper. Just in general, thinking about commodities, they're starting to roll over. And these are sort of the big ones that you want to kind of pay attention to. I mean, look at this downside on the daily chart. Yeesh. And so if we look at the weekly, this was a pretty clear weekly cycle low on the week of May 9th for copper. That was week 21. We had our high on week 12. So it wasn't a left translated cycle. It wasn't that bearish. But this was a pretty precipitous decline for 4 weeks, just like straight down. And then we had what looked like a promising bounce at one point, right? We topped out on week 3. We got this really ominous upper wick, which spelled bad news. The following week, which is the week of June 6th, we actually just consolidated. We did not make a low below here, but then we came in the next week, which was this most recent week, and we had big downside follow through. So maybe we get a bounce here. That work. So this week coming up is going to be week 6. Based on previous cycles, that would mean at least another 10 weeks of downside, which again takes you back to the monthly chart where these are sort of small shorter yearly cycles, but if you think about this is really a top on month 24 again of that 36-month cycle. So this brings me to something like FCX, which is a copper miner. Great way to get exposure to copper, or the inverse, right? It really has the same look, the chart. We had a rally, we topped down on week 4, now we're coming down pretty sharply. In this case, these weekly cycles tend to last pretty long in the 25 to 30 week range. I mean, the previous two were 33 and 35. So I have, I have some puts on this on FCX. It's a pretty good way to play copper exposure, and it looks like we could descend for quite a while. And of course, keeping in mind that the entire market is coming down, and so it's not like these things are falling in isolation. If we take a look at oil, I think that's another really important one. I think this was very clear that, if we're on the weekly chart, right? So yeah, I haven't updated this for a little bit. So we had our high on week 14, and then it looks like we had our ICL on week 19, and then we just had like this kind of stealthy sort of little rally coming out of an ICL, right? So that's week 1, 2, 3, 4, 5, 6, 7, 8, 9. Is that a new high? 123, 26, yeah. So a new high on week 9, but notice, this is where the details are important. This high, I'll take the log off. This high is not higher than this high, so it's a lower high. And that's pretty big downside follow through. So we really had a high on this week, then we came in the next week, made a slight higher high. Notice this is the same pattern as uranium, right? It's a fake breakout. We had a slight higher high, and then in this case, we went way below this low here. So we made a huge bearish outside candle, which is what you expect when you get a false breakout. This was also same idea. Came up, made this huge upper wick, and this is the idea of not finishing on the same candle. So it didn't finish on this candle, but came through and finished it. Well, actually, didn't even finish the job on this candle. Didn't quite make that low. And we still actually haven't made that low. That's actually a good point. We've just really kind of consolidated here. But now you imagine, do we survive another test of that 93 area? Because it does look like that's where we're headed. So that's oil. If you look at DBA, which is an agriculture fund, you can see we've topped out. This is a weekly chart. We've actually really been declining for the last 4 weeks. Coming in this coming week is going to be 5 weeks that we've been under this kind of swing high here. And so all of these things had a rocket launch. This is the monthly chart here on the lower right here. I'll zoom in. Had a rocket launch off that low, coming off the COVID crash, and we may be getting that 3-year cycle low. Let's look at natural gas really quickly. I mean, look at this monthly chart. Yikes. That really says it all. Again, not to belabor the point, but it's the same pattern, right? A false breakout, if you want to call it that. Bearish outside bar, if you want to call it that. It's a slight higher high than this, but then we start to come back and fail. It starts with an upper wick, which tells you the pullback is underway. It goes red. And now we'd expect to make a low below this low here at 23.17. We're at 23.68. If we zoom in to see the action on the daily chart, yeah, this is interesting, right? So we just kind of gave way. I mean, this is a big kind of gap area. So you could imagine we get a little bit of a rally, right? Like something like, maybe a little bit more downside, but then come up here to fill the gap. and then we kind of continue our move lower. Again, especially if we're moving into, if this is a 3-year cycle high, we have, you know, another 9, 10 months of downside. I mean, look at this weekly candle. Oof, that tells you a lot. So I think this paints a pretty clear picture. That's what I'm going to be really watching. If this is a potential 3-year cycle high that we've had, you know, and like so potentially the 3-year cycle high happened a couple of months ago. That means there's still a lot of time to catch a short. That's going to need to be very methodical because there are going to be a lot of short squeezes, a lot of really powerful bear market rallies. But this could really be a very clear signal of the trend to come. Last thing I'll look at actually is wheat. So that's just a specific, you know, ticker symbol wheat. You can actually buy an ETF. So we've actually just been consolidating. This is a weekly chart inside the range of this big candle from the week of February 28th. Wow, that was a long time ago. So we had a big pullback, right? Upper wick. But now we've just been consolidating on the upper range of that bar. So that bar has a low of 840 and we're up here at 1060. So that kind of gives you a sense of, you know, if we're going to get a pullback like everything else is pulling back, you'd be shocked if you don't get down to that level here. I'm actually just going to create an alert really quick. So that's the picture.